Hello, hello, and welcome to uh, July 9th, Friday. Friday to the 9th. Gold, 17%. Let's move on. Oh, before we go, we get the bad news out of the way. The Stochastics got 3.8, which actually is better. It was -6 yesterday. And the SPY actually fell back a little bit. It was 16.5 yesterday. So a little pullback on the SPY and a little movement on us for the Stochastics. Let's get down to the numbers. Okay, gold. There's our gold. Our stop is here at the EP stop, and we're holding on 17% against a ode of 31.53. And this was the STO uptrend, which means we only were looking at the indicator down below. Now, one of the things to note I forgot to mention yesterday is that, excuse me, the STO strategy here is based on 40 points. So the STO must be below 40. That's why sometimes the STO strategy will be ahead of everybody else because it's going to go in here in the what they call the turnaround zone. This is the turnaround zone. One of the theories of STO is that the stochastic crosses the 20 line right there, crosses the 20 value, and is below 40. And the idea is to try to capture the doji zone and then move up. That is the concept behind the stochastic strategy up, or we call the core group, because it's only dealing with the core elements of stochastics, RSI, and histogram MACD. It does not consider if it's what is the MA trending in what direction, or if price is close above or below it for confirmation. That is the other two strategies that we have going. So this is what gold is, the STO and the uptrend. Okay, that said, let's go on now to our next leader of the group. That's PG, and PG is right here. And there's PG right there. There's PG. And we have also cleared the gantry. This is already in the EP stop. It's going right there. This was a trend, stochastic trend, which meant that we set the trade up on this candle because the 10 EMA, in confirmation with the core group, said that this was going in the up. Price was moving into the up direction. We had several exits this past week, so it will be a matter of determining who's getting the most lost exits. The reason behind all that, pardon me, please. Sorry about that. It's really my mic was slightly off. That's what that's what we'll be looking at. Again, we'll be looking for the Elvis shift of August 1st to see if any of these are still within operation. We have everyone else is running in the negative zone here. And over here in account positions, another one with 8 orders working, we still have PGR outstanding. PGR has not triggered yet. So let's go look at that. So we'll go look at PGR, and we did get stopped out. Oh, another note here too. Look at this. This happens, and this is one of the most annoying things about trading. We got stopped out of EWJ yesterday, and look what happened today. Popped up. Now, technically, this should show up on our scanner. When we run our scanner today, this should show up, and it will show up under the STO uptrend. It actually 10 EMA uptrend and the 10 close above the 10 EMA. So this is going to have, again, it's going to have a PG entry setup because now we have a double confirmation on the stochastic going up, along with the main strategy. So all 3 scanners should pick up this when we do the scanner. Okay, so we're going on to PGR and see why PGR did not trigger. Now remember, when you're doing these trades and you're using indicators for your condition for your trade, If the conditions below change, cancel the order. And here's a good example. This was a put. We were going for a put here, and the order reversed and actually closed above our stop. But the trade didn't trigger, so it's not a loss, but we are going to cancel the order. Remember, the lesson to cancel the order is come to the gear shift, show orders, apply, OK. There it is. Then cancel the buy order. You cancel the buy order, it automatically cancels the sell order. If you cancel the sell order, the buy order will still be in play. So you don't want the buy order going in because it's already, we're exiting this trade because of the condition change. So there it is, gone. Now, also do your notes. Come to your notes, and here we're going to go 7/9 and order canceled because indicators, no, price reverse and indicators reverse. Indicators reverse. There we are. And boom. Now it's up to date. And we could also take this out too and get this out of the way because we really don't need this anymore. It's gone. So there is for that. It was a stochastic going downtrend. Again, it was only taking the indicators in consideration. It was not taking that the 10 EMA was uptrending and price closing above the 10 EMA. So essentially, this order should have not been taken on the premise of the other two. But all three strategies are being run independently to will it down to the best two in performance. Okay, that takes care of that. So let's go on in the last closing minutes of we got KR got into the trade today. We got a little KR. KR got triggered today. And let's see what we got going here. Okay, and look at this. It got into the trade. It's still running behind because remember, you do have a spread. You have to worry about the AB. I'm going to go turn this off. So this is why I like to turn the bubbles off because they do get up real estate and they don't need it until we need them. So there we are. Okay, so the price we got triggered into KR, and we're going to be looking to see for price. Now you can see this was the stochastic strategy up. Only these indicators got KR into the trade. And now look at here. If we were using stochastic trend and close above the 10 EMA today, it would qualify. So this is looking pretty good. It has three qualifiers in its corner of the trade. So with that said, it's scanner time, and here we go with the scanner. Now today I'm not going to do loss leaders. I'm going to give you guys Stochastic Up Trend, and we're going to go to the market. And we're going to have to expand the screen because I know what's going to happen. All symbols. Oh, we're going to change this to $10 and change this to 40. Okay. We're going to keep it within, and we'll actually make this 5 because that's where the institutions start. Institutions start buying young stocks at $5, between $5 and $40. That's where, according to Bill Polis of Profits Run, he says that this is the most lucrative for options because this is where companies start getting a notice and getting put into institutional buying. All right, let's run this uptrend and go. We got 2,200 that qualified. We have 937 that qualified on the volume, and we'll see what we have for the weekend gift. This is your Friday afternoon weekend gift, and there you are. And look, we're going and we arrange by biggest volume. We have 29 issues. There's our 29 issues, and it's by volume. And like I said, my grandson, he cuts it off at 5 million. Anything falls under 5 million, he might dab in these two if he knows something. But if he doesn't know any of these guys, he's not touching it. And he'll be here. He'll be in this zone here. There's a loss leader right there. Macy's one of our loss leaders in one of the other accounts. Well, with that said, we'll conclude today's report. For losers become winners with Alpha Gold at 17%. Have a happy weekend. Bye-bye.